Sir, we are live, sir. Can start your proceedings, please.
Dear shareholders, very good afternoon to one and all. On behalf of Select Energy Systems Limited, I welcome you all for this 28th annual general meeting of the company. As per the circular issued by SEBI and MCA, we are conducting this annual general meeting for this year through virtual mode. Now I request our chairman to proceed the meeting. Thank you.
Ladies and gentlemen, I have great pleasure in welcoming you to this 28th annual general meeting of Select Energy Systems Limited. The requisite quorum being present, I now call the meeting to order. Let me introduce the directors and the senior executives. Mr. R. Chellappan, Managing Director. Mr. A. Balan, Joint Managing Director. Mr. K.V. Nachiyappan, Full-Time Director. Mr. V.C. Raghunath, Full-Time Director, and Ms. V.C. Nirnalini, both of them are attending the meeting online. Independent Directors, Mr. G.S. Samuel, Mr. S. Krishnan, Dr. S. Inian, Dr. M. Ravi. Non-Executive Director, Ms. Jayasri Nachiyappan. Senior Executives, Ms. R. Nikila, Chief Financial Officer, Mr. R. Satish Kumar, Company Secretary. I would like to inform the members that authorized representatives of the statutory auditors, Messrs. Deloitte Haskins and Sells, LLP Chartered Accountants, Secretarial Auditor Mr. R. Kannan, KRA Associates, Partner KRA Associates, Internal Auditor S.K. Ram and Associates, and the Scrutinizer Mr. P. Iswaramurthy are present here in this meeting. Ladies and gentlemen, the Register of Directors, key managerial personnel, and directors, shareholding and the Register of Contracts and arrangements in which the directors and KLPs are interested, maintained by the company in accordance with the provisions of the Companies Act of 2013, are made available in www.evotingindia.com. And members may view the same during the continuance of this meeting after login by using their user ID and password. Notice of AGM convening the 28th annual general meeting along with a copy of the annual report for the year ended 30th March 2023 have already been circulated through email to those members whose email addresses are registered in the directory, depository participants or companies registered and transfer agent, Cameo Corporate Services Limited. The requirement of sending physical copies of the notice of the AGM and the annual report for the financial year 2022-23 has been dispensed with by the circulars issued by the MCA and the SEBI. However, as per SEBI circular, if any member asks for a hard copy of the annual report, the company shall arrange the same. Accordingly, the physical copies of the notice and annual report had been dispatched to few shareholders based on their request. The notice of 28th AGM is taken as read. The auditor's report on the financial statements of the company for the year ended 30th March 2023 does not have any qualifications or observations or comments on financial transactions or matters having any adverse effect on the functioning of the company. Auditors have given a clean report and the same has been circulated to the members of the company. The auditor's report is taken as read. The secretarial audit report for the year ended 31st March 2023 has no qualification or observations or comments. E-voting. In accordance with the provisions of the Companies Act 2013 and the amended rules, the company had provided remote electronic voting facility on the Central Depository Services India Limited CDSS e-voting platform for transacting the business contained in the notice to all the shareholders of the company as on the cutoff date of 19th July 2023. The remote e-voting period commenced on 22nd July 2023, 9 a.m. and ended on 25th July 2023, 5 p.m. The remote e-voting module was disabled by CDSL thereafter. Members as on the cutoff date, that is 19th July 2023, who did not cast their vote through remote e-voting may cast their vote during this meeting, and members who have voted through remote e-voting cannot vote again through e-voting during the meeting. The Board of Directors had appointed Messrs. P. Iswaramurthy and Company Secretaries as the scrutinizer for the conducting in the fair and transparent manner the voting process for the remote e-voting as well as for the e-voting during the annual general meeting. Now I request Company Secretary to proceed with the agenda for voting.
Dear shareholders, members who have not cast their vote through remote e-voting may vote now through e-voting by providing their user ID and password during this meeting. The e-voting platform of CDSL, www.evotingindia.com, and the NSDL, www.eservicesnsdl.com, will be available for e-voting by members until end of this meeting. The following subject matter of the resolutions are proposed in the notice. Resolution number 1, ordinary resolution, adoption of the audited financial statements of the company for the financial year ended March 31, 2023, the reports of the Board of Directors and auditors thereon. Resolution number 2, ordinary resolution, declaration of final dividend. Resolution number 3, ordinary resolution, appointment of Mr. A. Balan as a director of the company. Resolution number 4, ordinary resolution, appointment of Ms. V.C. Murnalini as a director of the company. Special business, resolution number 5, special resolution, continuation of directorship of Mr. S. Annadurai as an independent director who is attaining age of 75 years. Resolution number 6, special resolution, reappointment of Dr. S. Inian as an independent director of the company. Resolution number 7, special resolution, approval for giving loan or guarantee or providing security under section 185 of the Companies Act 2013. Resolution number 8, special resolution, approval for increasing the limit with respect to providing loan, guarantee and security and investment under section 186 of the Companies Act 2013. Resolution number 9, ordinary resolution, ratification of remuneration of cost auditors. The link for voting is already enabled and shareholders are requested to cast their vote. Thank you. Over to Chair.
Ladies and gentlemen, to conclude, I thank you for sparing your precious time and for patiently listening to me. Now I request Mr. R. Chandappan, our Managing Director, to address the shareholders regarding the performance of the company for the financial year 2022-23.
So, thank you, Chairman. It's my privilege to wish you once again a very warm welcome and good evening. I just to give a very brief about our business model. As you all know, Select stands for Solar, Wind and Electronics. And this is our 28th annual general meeting. After our UPS business that was discontinued in 2012, we are making good growth in the area of clean energy, predominantly in the solar space. And currently, we have a very well-organized manufacturing plant for solar PV modules. It has a nameplate capacity of 700 megawatt and guaranteed throughput of 500 megawatt capacity using a fully automated state-of-the-art facility near Coimbatore. And we have balance of systems plant to support for all the module mounting systems and the complete tracking solutions array combiners and intelligent junction boxes that are the balance of systems for the solar power generating systems. So with this manufacturing background, we have 4 business verticals. They are well augmented and led by professional teams under Swelect. The first business vertical being channel business. We sell our products through channel partners, authorized distributors. They are trained to install solar power systems in the selected market, especially in the home segment, SOHO and SME areas. The second business vertical for the company is our own rooftop business, wherein we are directly engaged ourselves in installed several megawatt capacity rooftops in IOCL refinery rooftops, several textile mills, Olympia Tech Park, Exide battery plant, and there are so many such large installations, including all the IITs, Delhi Airport, and a few other landmark installations. The vertical number 3 is our EPC contracting business, where we develop the complete land and then carry out the construction of the plant. And as a turnkey solution, we have been doing the EPC business very much. And the 4th vertical is our independent power producer vertical, wherein we have our own solar assets and we sell power as a product to major customers like central government, SECI, IREDA, airports, many dairies, and leading hotel groups and commercial C&I space, we can call it. So with these 4 verticals and the very excellent backdrop of manufacturing facilities, Swelect is truly a 360 degrees green energy company to provide the green energy for the various for C&I and various other processes, including customer projects for their own use. And as you are all aware, CBAM, that is Carbon Border Adjustment Mechanism, is becoming a norm now, whereby the regulatory bodies ensure that every business is achieving its net zero and the greenhouse emissions are to be controlled. And there are global forums, and our state government and central government all have taken a step to reduce the carbon emission and have the country self-sufficient with the green energy by 2030, a milestone, and 2070, a larger milestone. That's going to be a 100% net zero situation. With this kind of requirement, which is a very compelling requirement, that also will make us qualify into ESG program, that is Environment Social Governance Program, by which the business entities engaged in various processes and exporting business their products to various countries will have easy passage of their commodities, including financing options from the European banks. So that way we are very close to achieving our own net zero in the foundries and various other processes. And also we are helping our customers to achieve their ESG compliance very soon. So with this kind of a very situation, global warming is one side, there is a compelling net zero compliance is on the other side. We are in the right spot. So with the newly installed and commissioned plant rolling out high quality solar PV modules and the 200 megawatt capacity of balance of systems plant in Salem, we are also looking at backward integration to the next level. That's going to be the cell line. But after the stabilization of the module plant, we will be taking that as our next agenda. So that will fulfill our position to qualify into PLI scheme launched by the government of India. So this is about the overall scenario about our business and the next steps. What we do is in terms of the numbers, in terms of our financial details, financial highlights, and also company highlights, I would request my colleagues to proceed, take on from me. And I request our CFO, Ms. Nikhila, to give a short synopsis on the financial status of the company. Thank you very much.
Thank you, Andy. A very good evening. I welcome one and all to the 28th Annual General Meeting of Swelect Energy Systems Limited. I would like to present a snapshot of the financial outcome for the year gone by and for the year to come. Our standalone revenue for the year stands at 282.10 crore, and our consolidated revenues are at 408.68 crores. Our standalone EBITDA is 58.82 crores, and our consolidated EBITDA is 82.89 crores. I would like to present the revenue and EBITDA trend of SESL over the past 10 years. As can be seen, there are fluctuations, but the trajectory is on the upward trend. Your company has witnessed a stable turnover despite the closure of the factory in its Dabaspet, Karnataka. The EBITDA has been consistent over the years. Your company has also concentrated on the construction of IPP plants and has successfully commissioned a 4 megawatt and a 7 megawatt plant under various subsidiaries during the period. Select HHV Solar Photovoltaics Private Limited, a state-of-the-art solar module manufacturing facility, has started its operations on 20th of February 23 and had held its open house on 23rd of March 23 and is successfully carrying on its operations till date. Amex Alloys Private Limited is looking at a healthy order book position for the upcoming year. Next, I would like to present the asset database of our group. As you can see, the first few line items, they present the value of the solar plants which are installed in Swelect and our various group companies. The other side presents the debt which we have raised for the construction of those plants. The subsequent line details the factories and other immovable properties which are owned by Swelect and its group. The last few line items are the working capital facilities which have been taken by the companies. These are mostly supported by our cash collaterals. As can be seen from the report, our debt component works out only a 43% of our total value asset value, and our net debt component is far lower. Moving on to our discussion about the discontinued operations which had taken place during the period, I would like to start out with a small background. In 2014, the company acquired 100% equity of HHV Solar Technologies Limited, a solar module manufacturer in Bangalore. The plant's capacity was increased to 110 megawatt in stages for company's requirements of quality assurance, cost saving, and timely project completion. In 2016, the company merged with our entity for administrative convenience. The solar modules which were produced was used mostly internal purposes for our independent power producing plants and EPC contracts. However, a portion was also sold through our channel lines. The ownership of the plant allowed the company to also meet the tender requirements that mandated the Made in India solar modules. The renewable energy industry, as you must be aware, is facing unexpected market changes, particularly in the cell line, due to which there was a steep shortage of suppliers. Due to this, the company would have had to operate the plant at a substantially reduced capacity, could have even incurred a loss with respect to fixed expenses. To avoid such losses and adapt to the technological advancements, we had agreed in our last meeting to stop the production of our factory in Dabaspet. Consequently, during the period ended 31st March, the company has taken steps to conclude the closure activities and has settled all the dues pertaining to such closure. I would like to thank you all once again for your presence at our AGM. Thank you.
Okay, moving forward, we will discuss about the performance industry highlights presented by my colleagues. I now hand over to Mr. Balan for the further proceedings. Thank you.
Thank you. Thank you, Chairman. Thank you, MD, and their board of directors and investors. I would like to extend once again a warm welcome to this 28th AGM of your company. Can we have it? While the presentation is it has come back. Next. Next. I would like to give the performance on key projects on 4 verticals, what our MD has already explained to you. We have, during last financial year, we have executed the energy sales plans, that is the projects which is selling energy to the customers of 6.5 megawatt plant, and which accumulated to 140 megawatt as of now, and the capacity is at 140 megawatt. And the design, engineering and procurement projects last year, what we have executed up to 42 megawatt, which is a total value is now 116 megawatt. The rooftop solar power plant and water pump projects was a value of 1.5 megawatt, a capacity of 1.5 megawatt, and its total capacity is now, as on date of our company, is 77 megawatt. So there is an overall cumulative project executed across pan India is 333 megawatt, and still it is growing, and we hope this will continue to have the same trend of increase in the capacity. Next. So this is one of our solar power plant, which is in Trichy district, which is in Trichy district in Tamil Nadu, is having some 80 megawatt project, and this is one part of that project, which is a combine of both our EPC customers and as well as Swellet's own assets. Next. This is another project location, which is in Karur district of some 82 megawatt capacity. Again, it is combination of both customers project and our own IPP projects. Next. This is another project which is 79 megawatt, which is basically combined with our own IPP and as well as customers project. And this particular picture gives a power evacuation to Airport Authority of India in Chennai. This is one in Chennai city, one of our customer who is having about 2 megawatt of rooftop solar power plant, and which is in heart of the Chennai city. And across like this, like what our MD has told about IOCL and metro stations and other customers, it is all accumulated to about 77 megawatt of rooftop power plant across pan India. So this, while we shown you the pictures of the capacities in various verticals, so I just explained to you the revenues generated on these projects. So like PV module sale, which has from 14.6 megawatt peak and grown to 19.4, and slightly it has come down to only 11.6 during last financial year. But the revenue has gone up from 26.8 in 2021 to 28. And basically, you are aware, our own module manufacturing plant was put on operation only in the month of March. Whereas the accessories required for the various projects, the revenue has increased to 16.2 crores from 6.8 and 14.8 and 16.2 to the last financial year. This is EPC projects for that we have executed for various customers. In 2021, it was about 25.8, and 21-22, 147.3 crores, and in 22-23, it is about 124.6 crores. You will be seeing that there is an increase in capacity, but whereas there is a drop in the revenue. Go back. Please. Even though the megawatt has increased, previous slides. Previous slides. Okay. Previous slide. Okay. So the previous slides you would have seen the capacity has increased from 34.5 megawatt peak to 42.5 megawatt peak, but whereas the revenue is slightly down because one of our customer who was holding who was asking us to carry out the EPC, they supplied their own module, which is a reduction in the overall turnover. Otherwise, the capacity increase and the revenue proportionate to our own investment has really gone up. The next. In as an independent power producers, we have supplied green energy to various customers and to the government. From 90 million units in 2021, it has increased to 141 million units in 22-23, which is equivalent to a revenue of about 67 crores. This is the various verticals of business that your company has carried out. It is only a synopsis for you to understand. Thank you for your time. I will request my other colleague, Mr. Nachiyappan, to provide the business opportunity that has come through our O&M and EPC projects.
Good afternoon to the Chairman and Board of Directors. A warm welcome to our shareholders, friends, and well-wishers. It's my honor to present a few slides this afternoon on the plant performance and special projects and initiatives. At the outset, Swelect manages more than 200 megawatt of solar power plants, being rooftop or ground mount energy sale plants or EPC plants. Over 46 plants in number, and with a uptime of greater than 97.5% to maintain the highest level of energy supplied to all our valuable customers. In terms of performance, we are greater than 80% on almost all plants with a capacity utilization factor of 17.1%. All of this in 8 different locations of energy sale, which is our IPP portfolio, and over 10 locations of EPC, which is projects for our customers. Overall, we have worked with a team of about 100 engineers, and they're still going strong. Contract employees, also we employ more than 55 to maintain the housekeeping of the plant. So that was about the operation maintenance of the plants. Moving on to special projects and key initiatives, Swelect has ever been always focused in the latest trends and in being in line with the market trends, and therefore Swelect is actively preparing for being around the clock energy supply partner or supplier. To demonstrate this, we are building a 500 kilowatt wind solar hybrid with energy storage. The proposal is in the final stage of government approval, through which we would be able to demonstrate round-the-clock energy supply to our various customer and market needs. It will also showcase Swelect's capability as an RTC energy player in the market. Select is also actively developing alternate green and renewable energy solutions, which are the latest trends according to the market needs. That's all from my side. Thank you for your time. I now invite Mr. Raghunath, our sales director, to take over the rest of the presentation.
Greetings and very good evening, one and all. Respected Chairman, esteemed members of the board, our valued investors, ladies and gentlemen. It gives us immense pleasure in inviting you all to our 28th AGM. And it gives me a great honor and pleasure to present the industry highlights. And many thanks to our JMD Balan sir and Nachapan sir for giving the key highlights of our company. Today, I'm going to present more on the industry highlights. As you all know, India has made a lot of progress in the global front in adding solar and wind capacities. And India has always been a forerunner, we're in fact number 4 globally in terms of the renewable energy capacity additions. According to Bloomberg New Energy Finance, India is expected to add close to 11 gigawatt of solar for this financial year and 12.8 gigawatt of solar in the next financial year 24. This is basically because of 3 factors which our MD rightly pointed out. One is the ESG, which is becoming mandatory or obligatory for all the corporate houses and MNCs who have to follow the environment, social and governance. And sooner it has to be a compliance perspective. So this combined with India taking the G20 chair this year, climate impact and climate change has been the focus this year. And we are sure under the current government's policies, we should see more and more deployment of renewable in toto and more. And next is the stricter decarbonization of the grid, meaning more and more coal-fired plants or other conventional sources of energy and their power plants are, and more non-conventional, that is wind, solar, and other, for example, green hydrogen power plants are coming up. And next important factor, what our MD also pointed out, is the CBAM. CBAM is the cross-border adjustment mechanism. This is basically is a EU led movement in order to avoid carbon. So a significant role in the capacity additions in the Indian solar industry. Next slide, please. Yeah, this is to even brief the decarbonization program. That is steel, cement, petrochemical. So this is a net zero scenario which the entire globe and India in specific is looking at. If you see the current focus on both in the government and the private sector has always been to reduce the brown power, or basically the oil and gas, and of course the coal. So assuming we take climate action seriously and the policies are conducive, by 2050 we should achieve net zero. But assuming that the policies or we don't embrace the renewables, it is going to balloon. In fact, by 2050 the coal will come down. But whereas the other emissions like carbon removals, electrification, green hydrogen, bioenergy, and carbon capture scenarios are actually going to start adding on to the carbon emissions. So that's why the green hydrogen and CSS and also greening of the grid, especially with solar and wind, is getting increased importance both globally and in the domestic market. Now, I would also like to present our HHV Solar new manufacturing facility with the permission of the board and the investors. This is the SHPV new facility which has been commissioned, which my colleague Nikhila was explaining. Next slide, please. Yes, this is a 100,000 clean room facility. The built-up area is around 1.3 lakh square feet, out of which the production square area is around 40,000 square feet. It is a fully automated facility with an annual production capacity of 700 megawatt. And we are very happy to say that this is also running on clean power. That is, our own solar power plant is powering up to 20%. And by year end, we will be increasing up to 80% as our production ramps up. And this is a completely temperature controlled, humidity controlled AC raw material stores for maintaining the hygiene and the quality of the critical raw material. Next slide, please. Yeah. So though the installed capacity is 700 megawatt, the production capacity is 500 megawatt. This is on account of discounting for downtime, shift change, tool change, and the realignment of the EL and the robotics. So we are looking at 500 megawatt of production capacity, which translates to 2,700 modules per day. This is a fully automated line, excepting for one station. The entire line is fully automated with almost 2 modules per minute kind of speeds. And we have an extremely advanced non-destructive laser cutting machine, which is a robot, which ensures high accuracy in the cell cutting with clean cell cutting and almost near zero rejection in terms of cell, that is full cell to half cell conversion. And we have advanced trappers and stringers, which has 7,200 cells per hour. It's one of the fastest in the industry. And we have double stack multi-bus bar system, both for glass on transparent sheet and glass to glass technologies. So I will also be presenting the product lineup for this year. So this is a quick, collage of photos. We are happy to announce that, on 12th December, the machineries were put in and the fit out was made. And in 9th February, the first module was done. And we have successfully passed the ALM, that is approved list of module manufacturers. This is a MNRE and Government of India driven program, enlisting all the Indian manufacturers, which mandates the Made in India program, what Nikhila was also mentioning. And we are happy to announce that 23rd March was our open house and the product launch had happened successfully. Next slide, please. So these are some salient points in the facility and some USPs we would like to share. So right now we are in the second shift. By 1st August, we are happy to tell you that we'll be going full steam with 3 shifts from 1st August. Currently, we are employing more than 200 people, and we are very happy to say that we are also encouraging diversity and gender diversity, and we are very happy to have a very inclusive work culture in Swelect. And in terms of quality assurance, we are one of the best in the industry, catering to all the certifications. It is a triple IEC, triple ISO, and UL certifications which are done. We have one of the highest QC and quality acceptance practices. We have 40 in-house quality checks, that is inward production and finished good quality checks, and we have an acceptance quality level of around 1.5%, which is one of the highest in the industry. And we are also happy to say that we have implemented intelligent process automation, that is with MES, which is being deployed at each and every station. So MES is basically a manufacturing execution system which guarantees efficiency, and also it is highly data driven, where you have complete traceability of the modules up to the cell level and in the batch in which the inward raw materials had come. So with this, we guarantee one of the highest quality standards in the market. And of course, it is only proper we say what are the challenges we are having. Yes, being a new facility, we are having some minor hiring issues, and price is always a pressure. And since the ALM is being extended for another 6 months, we do expect some market inertia happening. But our leadership team, along with the professionals here, I think we can overcome these momentary challenges. Next slide, please. So these are some key points, or I would say the salient features of our product. It's one of the high efficiency modules. It is a mono-PERC N-type cells what we are using here, as opposed to polycrystalline. One of the reasons we shifted from our Bangalore facility to this new facility is because the old facility only caters to the polycrystalline cells, which can only cater to up to 300 watt peak. Now the 300 watt peak is being phased out both globally and in domestic markets. So it makes all the more sense for us to have the latest technology, and also these cell sizes are not in manufacturing. That is for the old facility. So owing to that, we had to also order the complete line, and new robotics had to be ordered, and the Tabor stingers have to be changed because of the upgraded cell line. So, but this also gives us a leapfrog, and we are right now one generation ahead already in terms of generation and efficiencies. Next slide, please. So this is the lineup, what we have. We have started from 108 cells up to 156 cells. It's one of the highest ratings right now we have. Many thanks to our management and the leadership team. We were able to get the state-of-the-art facility and the latest technology up and running. Our modules have 12 years product warranty and 25 years power generation guarantees. The design life is for 30 years. Right now we have a high efficiency monofacial modules, which right now we are doing crystalline, that is single crystalline, or what you call as monocrystalline monofacial modules. By October, we'll be launching glass on glass bifacial technology and also glass on transparent sheet technologies. Our modules have already been submitted to the TUV, and we should be getting our certifications for glass on glass technology as well. Next slide, please. So this is the product roadmap which I had told. By Q1, we had already launched our monofacial, which is M10 technology. This is basically a P-type bifacial half cell technology with module powers up to 540 watt peak per module. And going down, like I said, in Q3, we'll be launching our M10 bifacial glass on glass, and Q2 M10 again bifacial transparent backsheet technologies. And Q4 will be launching our GTEL, that is basically a 12 bus bar system, because like I told you, we have our Tabors and Stingers capable of handling multi-bus bar. So 12 bus bar will be one of the highest in the industry, and we are very happy to say that we'll be launching our 700 watt peak bifacial glass on glass and glass on transparent backsheet by Q4 of this financial year. So that's that. So rest assured, Swelect and the team here, is fully geared up to give you world-class products and services. And thank you very much for your attention. Thank you.
So while I thank my colleagues, ladies and gentlemen, once again, I would like to take a minute of your time. So this explanation justifies very much our, shift from Bangalore to the new facility and building a state-of-the-art facility, because the new requirements in the industry, as we talk about bifacial and then high power rating. Sorry for the interruption. So this justifies the new facility, and we are in a very comfortable zone to address the new requirements and the net zero conditions. That's all go in our favor as a solar energy company. And with regards to Amex Alloys Private Limited, as you all know, that we are the only foundry group in India to cater to investment castings, steel castings, and iron castings, all under one umbrella as a one-stop solution provider. And Amex Ions has completed the expansion in the area of high pressure molding line and the automated sand plant. So now it is gearing up with the volume. And the other steel foundries also have gained momentum post 2 turns of COVID and the European-Ukraine war. A lot of issues in the commercial market, in the scrap market especially. Nickel prices are shooting up, and now things are getting stabilized, and we are improving our order book position as well. So Thank you, ladies and gentlemen, and I hand over back to our chairman, please. So on behalf of our chairman, I request our independent directors to give their views, please, a short overview from their side for your kind attention, please.
Good evening to one and all. As we heard, Swelect is recognized as a Tier 1 solar PV module manufacturer by Bloomberg New Energy Finance. And Swelect companies really, it received a certification from Bureau of Indian Standards and other international certification. Of course, as we all know, Swelect companies having 38 years of experience, and as we heard from the presentation, it has a new facility, has about 700 megawatt manufacturing capacity, and so far 333 megawatt has been installed so far, and it actually state of the art manufacturing facility is fully automated, and it's a clean room facility it has. And as we see from the presentation, capable of producing module power ratings from 550 to 600 watt peak. And particularly, interestingly, the cell is really the mono PERC, that is PERC, that is a passivation emitter rear contact cell. It's a very recent technology, and it is for both monofacial and bifacial applications. And the highlights from the cell is the efficiencies, it will go up to 20 to 22%. When we take monocrystalline, it gives only say around 16 to 17%. If it is polycrystalline, still lower, 12 to 14%. But this cell will give more than 20% efficiency. And because efficiency is more, it is space efficient also. That is, the occupational space will come down. And it gives better performance in high temperature. That is a very important thing. When the temperature shoots up like 40 plus, and the other cells know the efficiency will come down, but this will give better efficiency, better performance. And apart from that, it has very lower degradation rates in long term. So, that is the very specialities of this wonderful, the mono PERC cell. And as we all know, so it has tie up with MNRE, the channel partner, and so we have separate ministry to promote renewable energy. Other countries are not having, and India is having separate ministry to promote renewable energy sources. That is Ministry of New and Renewable Energy. And so far, the country has installed about 63 gigawatt of solar power, and 134 gigawatt is under pipeline. Swelect is having wonderful contribution in this target. And when we take up Amex allies, and so about 80% of consumption only from renewable energy sources. That is very interesting. And of course, the company is involving in producing a lot of valves, valve casting and automobile components and earth movers components, etc. And again, 60 to 70% of reclaimed sand is being used to preserve the nature. So it is wonderful. Really, the company is performing very well. And we had an opportunity to visit this new facility. It is really awesome. And and in coming year, definitely we can expect a very good performance. And I really thank you for this wonderful time, for this opportunity.
Thank you, sir. So we would like to introduce our new board of director, independent director, Dr. M. Ravi, who has been holding a very high position in the police department, Tamil Nadu police, and very well recognized officer and a highly ranked IPS officer. So with Dr. Ravi's presence, our board has a real excellent composition of independent directors as well. So I humbly request Dr. Ravi to address few words to our valuable shareholders.
Respected Chairman, Board of Directors, Company Secretary, shareholders and other stakeholders, good evening to you all. At the outset, it gives me an immense pleasure to be associating with this select, which is running on healthy and sound leadership as well as supervision. As an independent director, I have been observing this company for the last few months. This is being run by an expert of board of directors, and definitely the shareholders need not worry about their investments. I have seen several companies. This company is one of the strong companies which is not only serving the interest of the society but also the interest of the shareholders. The primary objective of this company is not only give the green and clean energy but also the improving the economic status of the shareholders and the assets of the company. Just I want to outline few of the achievements of this company. See, basically as an independent director, I have to see the interest of these shareholders, how the risk management is being taken care of here, whether any conflict of interest is there. It is only to protect the interest of shareholders. I am like a watchdog. The independent directors are like watchdogs. It is not only to help the shareholders but also to help the board of directors for the efficient functioning of the company. See, India, a global leader in the deployment of solar and wind assets with over 109 gigawatts of installed capacity, which is accounting for 5% of the global total solar and wind assets. India is a forerunner in the renewable race, right behind the global majors like China, USA, Germany. And we are fourth. It is estimated that India will add 49 gigawatts of solar wind by 2024 and 25. As Mr. Raghunath has pointed out clearly about the various aspects, particularly the salient features of the company. He was telling about the efficiency of the system, like 12 years warranty and 20 years guarantee, the efficiency, the production. I think this is one of the companies which ensure that panel produces the maximum capacity of solar power. Some even German installed panels produce only 60%, I think 60%. But this is one of the efficient panels ever produced in India. This is the Indian, our government of India's aim is to Indian, everything is Indian made. Make India. See, your company makes use of three major strengths. One is high quality solar panel and balance of system manufacture. A very strong turnkey EPC and IPP player, especially in the commercial and industrial segments. Your company has made significant capacity additions during the year. Your company, through its strong channel partner network, has made great strides in the sales of solar panels and balance of system, BOS. Select also has successfully designed, engineered, and commissioned more than 42 megawatts of projects for its various clients under its projects sales vertical. I think you have Mr. Raghunath has told. It has also been adding more than 6.5 megawatts of solar projects in energy sales. Portfolio totaling is, I think, up to 140 megawatts of cumulative capacity under the IPP vertical. Select is proud to announce that your company is proud to announce that it has installed 217 kilowatt hour ESS energy storage system is under extensive testing and evaluation. Already, I think it is under testing and evaluation. It is happy to note that one of its step-down subsidiaries, like HHV Solar Photovoltaics Private Limited, is doing very well. It has successfully completed the construction of fully automated state-of-the-art with the new 500 megawatt production capacity of solar PV module manufacturing plant at Coimbatore. which I have seen virtually. I was supposed to come over there, but I could not visit. I think already all of you have visited, and just before me, Dr. Inian spoke that he visited the state of the art facility in Jaipur. And it is one of the leading solar module manufacturers. Of course, it caters the needs of both domestic and international. That is very important. Not only we are catering to the clients of domestic, but also in abroad, international clients. So the marketing is really a very strong marketing. So the shareholders should be proud of it. The new energy finance, there is PNEF. The solar modules are certified for IEC, UL, and later PVEL, which are industry-leading quality standards ensuring best-in-class quality and product reliability. The solar modules will undergo more than 40 plus stringent quality checks and tests, promising the highest quality and on-field performance. And your company has, won many awards and credentials, which I cannot, suppose if I give the list of awards and credentials you have got, the list is very, very long. Like I can tell that Performance Excellence Awards 2022, Ground Mounted Solar category, Soft Disk Solar Awards, so many awards I have got. So this is to the pleasure of all shareholders and stakeholders who should be happy about the performance of this company, and you should be proud of being associated with this. And nothing is to worry. Thank you very much for this opportunity of addressing this gathering and this AGM annual general meeting of, I think, 28 meetings. Thank you.
Four shareholders have registered themselves as speaker of this meeting to ask queries on the company's operations and the annual accounts for the financial year 2022-23. The company has provided the links to the shareholders by email. We suggest that members confine their questions to the company's operations and the annual accounts for the year 2022-23. In the interest of time and with a view to give adequate opportunity to all the registered speakers, we request members to be judicious in the use of time and in expressing their views. We will be pleased to provide any clarification that the members may require regarding the accounts and operations of the company during the year 2022-23. We now request the speakers their views and comments. Name of the registered shareholders will be announced one by one. The respective shareholders is requested to click on the link provided by the company and also have to allow camera and use internet with a good speed to avoid any disturbance. The company shall address the queries raised by the shareholders. Question by shareholders, 5 minutes each. Name of the shareholder, Mr. Rupesh Gulabchand Tatia.
Mr. Rupesh Tatia, sir, you can speak.
Yeah, hi. Can you hear me, sir? Hello, can you hear me, sir?
Yes, Rupesh, please go ahead.
Yeah. Thank you for the opportunity and congratulations on commissioning the 500 megawatt line with the latest technology. I have a few questions. I'll ask one by one. It was an excellent presentation, sir. Thank you for that as well. What kind of what is the current capacity utilization of this line, and how do you see this capacity utilization moving into FY24 and FY25? That is, and the other part to that question is how would this capacity be used? What kind of sales will do to rooftop solar, to C&I, to utilities? How much will be captively used? That is one.
Okay, Mr. Rupesh, thank you for your questions. Since the plant has been commissioned and the products are under certification, we have organized ramp-up program as Mr. Raghunath was also explaining the various stages of expansion and the deposit utilization. So by end of this financial year, we should be crossing at least 50 to 60% of the installed capacity. That is about 250 to 300 megawatt. The utilization, if you look at, we are aiming at 40% sales to the developers, large scale developers. That will be the allocation. And another 20% will go to our own IPP. The balance of 40% will be divided between channel partner sales and then for export. So this is how we contemplate the sales structure at this moment, but things might change depending on the market needs. Thank you.
Next shareholder, Mr. Dhruvesh Anil Sanghi. Mr. Dhruvesh.
Am I audible, sir?
Yes. Mr. Dhruvesh Anil Sanghi.
Yeah. Am I audible, sir?
Yes,
Yes.
Yeah.
Okay. Sir, what is the impact of the duty structure when we compare things with China and India in the module manufacturing side? It is very confusing when we keep hearing, that China is cheaper versus India, as most of the entire value chain is being produced there. So what is the impact of this in the economics of the solar business, especially the module manufacturing? The second area is the O&M opportunity. Can you give some numbers in terms of what per megawatt, what can be the revenue, or per 10 megawatt or per plant? I mean, how does this work in terms of O&M opportunity and its margins? We also saw some of the JVs with one of the dairy companies, and I think you highlighted in your speech as well, or the presentation. So how does this really work? Do they buy? I mean, what is the structure like, and what are the economics again in this kind of a JV system? That how is it beneficial for the client? What is the amount that they bring, and what is the amount that you have to invest into such kind of a JV? So that was the third one. On your plant side, how should we see on the economic life of these machines? Because, for example, I was checking out some presentations online, and it was said that usually the machines needs to be replaced every 2 or 3 years. So does the economic, or what are the management assumptions here in terms of how fast these machines can become obsolete, and what are the economics around the same? And what is the role of Bloomberg qualifications, or some sort of certification where again we came across with some sort of qualification criterias that if your company and the module manufacturings are listed on certain rankings, only then the financing and the customers look to us as one of the option to source. Is it also similar in India and the Indian customers that you target? And what are your thoughts on the backward integration in terms of are you planning it ahead, and at what stage does it really make sense, and at what stage does it really what is the capex required around going ahead with the backward integration? Thank you. Those are some of my questions. Thank you. And I would like to congratulate the management and the team for such a wonderful presentation. Even last year, it was a wonderful presentation that you had done during the AGM. Thanks a lot.
Thank you, Mr. Dhruvesh. On the duty structure, if you look at presently, government has published a list called ALMM, approved list of module manufacturers, and also they have extended the applicability by 1 more year, meaning even companies, Chinese companies or any other overseas module suppliers can sell into India without having to take part into the ALMM list. Since they have extended it and the duty structure has not been altered, the situation is actually favorable for the overseas suppliers as well. But the issue is how good they are in complying to their own warranties and guarantees is a question mark that every developer should make a note of it. So once the ALMM restriction starts, we have to see how they drop the prices or how the safeguard duties will protect the Indian manufacturers. So for the time being, as you rightly said, it's a little bit of a confusing thing because some information come in the industry as if the duties have dropped, but the ministry says very clearly, both Ministry of Finance and Ministry of, that is MNRE, both say there is no change in the duties. Of course, there are no changes in the duties. So this is with regards to duty, we have to wait and watch at what point in time the ALMM will be strictly enforced. Then we have to see how the overseas suppliers react in the market. Are they going to further drop the price, or they are going to go through the duty applicable at that point in time? With regards to the O&M revenues, yes, definitely it's an important area where the operation and maintenance is important to ensure plant uptime and the plant availability and a higher throughput for that. So we are looking at initially to cater to our own plants. Since we have done about 330 megawatt of installations, it's important for us to do our own O&M, and we are also signing contracts with our customers for the operation and maintenance. The revenue stream is just beginning because solar plants will have, normally they are coming with long-term warranties. It can be 2 to 5 years warranty during the time of installation. So the O&M will start post-warranty. But we are all set, and already we have started getting into the revenue stream for the O&M activity. And then you talked about the customers getting into the equity part of the company. See, what happens here is there are two popular models to sell power in a large scale. If it is a government entity, normally it will be a simple, straightforward, open access power sale. So, for example, airports or MNRE or SECI, we sell the power as per the prefixed rate by the government, or we take part in a tender. The tender will decide about the price and the model of power supply. So normally some are open access sale, that is third party power sale, I call it. The second option is group captive power sale model. Suppose you are an industrial customer, you want to meet your net zero, or you want to get into your CBAM strictly into the carbon border adjustment mechanism compliance, then you can have your own solar park, or you can buy solar to qualify for net zero. Then what happens here is we create an SPV. We have 74% stake. You can take 26%, but 26% is compulsory to become a group captive off-taker. So I think this point is clear to you. So what we call, this is called the group captive option, and the scheme permits you to buy the power from the power generating entity where you are a 26% stakeholder without having to pay any cross subsidy charges. So this works very well in the both in C&I space. Hope this explanation is clear to you. So every time a new power purchasing corporate comes to us, we create an SPV and accommodate them in the specific SPVs so as to enable them be 26% stakeholders, and then they are eligible for the group captive power purchase without having to pay for the cross subsidy charges. And you talked about the machinery life cycle and the useful life of the modern lines. See, last time when we were in Bangalore, we ordered Germany, made Team Technic systems, Capital Stinger, and those are the heart of the systems. They all worked for 10 years easily. But suddenly the technology changed from 158.75 mm cell size to 180 and 210 cells. Those Tabor Stingers completely have gone obsolete. New lines have come in, and that's what you talked about, how frequently or what is the expected lifespan. So in my expectation, since we moved newly to the 180 and 210 regime, easily 5 to 6 years, these lines will stay powerful and then producing the capacity. And any extension from the 5th or 6th year onwards, according to me, it's a bonus for us. And talking about BNEF ratings, Bloomberg New Energy Finance Ratings, basically, any financing institution or a bank should have a comfort level. If you are a banker, looking at my credit rating, AA plus, AA minus, or whatever is that, accordingly you decide my line of credit and the lending rate. Similarly, BNEF Tier 1 grading enables or helps the customers to identify bankable modules. This is to ensure bankability in the space in the minds of the developers and the bankers. So any Tier 1 category module is bankable module in the international scenario. In India, still, they are not insisting on bankability as well as the insurance, like, Munich Re or Chubb insurance. That kind of insurance is not backed up here. But overseas conditions, there are bankability concept and then the insurance concept. So it works very well in the export market. And it's for us to go to US, it is a very strict requirement that we should be Tier 1 ranked module manufacturer. And coming to backward integration, yes, definitely we are keeping all our strengths of, they're waiting for backward integration. But once we stabilize a new plant, we will definitely go one step backward. That is wafer to cell conversion, the cell line. So today we are not able to really pronounce that much because, we have to stabilize the current plant. Probably sooner you will hear from us that when our cell lines will be, ordered, and we have space. Fortunately, in Coimbatore, the land that we have is totally about 14 acres. We have occupied only about 4 acres. So we have balance, and then cell line, it can be by the side of the module plant itself. So, Mr. Umesh, if you have anything more, please drop us a mail. We can communicate by mail. Thank you.
Thank you, sir. The next shareholder is Mr. S.P. Raman Shah Lisania.
Sir, he is not joined, sir.
Yes,
We can go to the next speaker.
Move to the next one.
Okay. Next one is Mr. Ajit Sanjay Garda. Ajit Sanjay.
Mr. Ajit Darda, sir, you can speak.
Hello, am I audible, sir?
Yeah.
Yes.
Yes, Ms. Ajay.
Yeah.
Please.
Yeah. Good evening, all, and thank you for the opportunity. First of all, congratulations for the successful commissioning of our new manufacturing plant. Sir, I have few questions. Sir, can you please provide working capital cycle and gross margins of our different businesses? That is solar PV module manufacturing, balance of systems, EPC contracts, wind farms, solar water pumping, battery, and solar water solutions, foundry, etc. Also, what are our strategies for the foundry segment as the industries we are catering to are performing very well, but we are still generating insignificant margins. Also, we have entered into a new product segments in this. Could you please provide the outlook of the same, and what is our capacity utilization in foundry segment? Sir, there has been a buzz around utility scale storage in the international markets. So, are we also planning to enter into that segment? Swelect is also aiming to manufacture solar cells in the next 1 or 2 years through joint venture partnerships. If you could elaborate on this plan, in a sense, how much capex will be required, etc. And sir, the next question is, could you please help us understand our new vertical, that is solar energy storage solutions, in terms of opportunities, growth prospects, competition, etc. Have we got any orders in this segment? And if you could quantify the same, could you please explain the rationale behind a decrease in the fair value of investment property from rupees 267 crores as on 31st March 2022 to rupees 40 crores as on 31st March 2023, as mentioned in our standalone balance sheet? Sir, do we have any plans to monetize the Bangalore land? And also, are there any other expenses that will be charged in the current financial year relating to the plant that we have closed? Sir, could you please provide more details about specific products or services our company purchases from Select Energy System PT Limited? Additionally, it could be helpful to know the reasons behind the decrease in purchases, the sharp decrease in purchases, and whether our company has started purchasing from alternative supplier. Sir, the sale of traded goods at the consolidated level increased from rupees 50 lakhs to rupees 8.5 crores in FY23. So, what are the products we deal into and how much margin earned and growth prospects of the same? Could you also throw some light on sustainability of renewable energy certificate income as it has been volatile in last few years? Sir, there are press reports about the fall in prices of Chinese solar modules. So, will this trend continue and how this will impact the demand for our products and margins thereon? Also, sir, some of the industry sources say that the Chinese solar cell prices have increased, but the solar module prices have declined. So, so just to overcome the higher import duties on modules and to be benefited from the higher exports. So, could you please, throw some light on this and whether these rumors are right or wrong? And are we participating in government tender solar and wind business? Also, which market is our target market, domestic or international? Please explain reason behind increase in exchange differences at standalone level from rupees for 4.75 crores to rupees 11.6 crores. And what is our foreign exchange policy to hedge the probable forex losses? Do we have debt reduction plans in the coming years as our net debt has increased in FY23 versus FY22? Also, what is our capex plan for the next 3 years and how that will be funded? Thank you so much, sir. Thank you for the opportunity.
So, Mr. Ajit, you have stacked a dozen of questions. We will try to answer because within the given time now and the details more you want, we can only exchange by mails. Your first question was, could you please help us understand the new vertical solar energy storage solutions? I go by your questionnaire that you sent in the mail before. Maybe the order has been changed, but I go by what has been prepared already based on your list of queries. So with regards to energy storage solutions, this is completely a new vertical, and we have already done our first trial site and it's working fine. So now as the market opens up, we'll be definitely taking part in all those tenders. And with regards to tariff of those, etc., it is not prefixed. It depends on the type of business and the quantum of energy supplied from the battery energy storages. Your second question was explain rationale between decrease in the fair value of investment property from 267 to the answer is the fair value calculation is a combination of cost of capital, growth rates, and the rentals. The rationale for decrease in the fair value is due to the increase in risk-free rates from 6.10 to 7.07 and market returns from 6.42% to 11.62%, which are used for the calculation of the cost of capital and thereby the fair value of the properties. The market index has increased 5x from last year to the current year, leading to a dip in the valuation as an equal extent. The 5x goes to the numerator, obviously, then the value drops. It's only a notional value anyways, you know that. Do we have plans to monetize, your next question, plan to monetize the Bangalore land? Also, are there any other expenses will be charged in the current FY relating to the plant we have closed? See, the discontinued activity was also presented by our CFO. See, last year and this year, it has gone through 2 financial years that we stopped the production line, and then to the extent possible, we have used the raw material, the extent possible to convert. And those machinery, etc., whatever is possible to be disposed, we could dispose them, and settlement to workmen and all other things. So completely closed because it was a leased property. It was not our own, so there is no further thing to do with the land there in the plant. But we had the land for expansion there, but somehow that was not suitable from the geography point of it. So that land the advance has been taken back by the company. That is your point number 3 with regards to the land. But the plant is, as far as the plant is concerned, we are completely closed and it has become a discontinued activity totally. And whatever could be recovered, we have recovered from the those assets. And your question is, could you please provide more details about specific products or services your company additionally would be helpful to know the reasons behind the decrease in purchase and see these things are all market dependent. So the entities Select Energy Systems Pty Limited is our trading partner for all imported raw materials for the manufacturing of solar modules. The reason behind the current year decrease in the purchase is due to the closure of the Bangalore factory, and the new factory has to be tried with the new system, the factory implementation, and then the process, the alignment of everything, and then it's a process. So next year onwards, it will go back or it will increase the trade between the two entities. Next is the sale of traded goods. The sale from traded goods have increased during the period due to variation in the contract signed with the customers. Example, contracts where the scope was limited to supply transformers and the balance of systems where the customer has purchased the modules, etc. But the margins are in line with the market, just by information. And your next question is, could you throw some light in sustainability of renewable energy certificate, etc.? So as you all know that REC was stalled for many years and then restarted now and traded for a few months at the rate of 1 rupee maximum price. Now the last trade has come down to 750 rupees. So that's also, because a lot of REC inventories in the market being offered. So REC has definitely, lost its charm at this moment. Then you talked about press reports about the fall in price of Chinese solar modules, etc. So this again, it's linked to ALM. I was explaining to Mr. Dhruvesh, it's linked to the ALM status. So we have to only wait and watch. The next point was, are we participating in government tenders for solar and wind business? Of course, we are very much. We are there, and we have won many government contracts as well. For example, Chennai Metro Rail, Hindustan Petroleum, Indian Oil Corporation. There are other government projects. Recently, IIT Madras, and so on. They are all not exactly fully government, but quasi, we can say. And we talked about forex difference. You know that it depends on the volume, timing, etc. And also last year, if you look at the bankers were not in favor of giving a good rate for the forward cover. So also the SOFR rates have gone beyond 5%, and 5% SOFR rate plus basis points, etc. If you calculate, it is almost equal to the volatility percentage itself. So even if you have hedged it also, because the company has a policy of at least 30% of the forex exposure should be covered under the forex policy, but it would not give any benefit, and bankers were also not in support of hedging. So this also we have to wait and watch how the international market evolves. But as you know, so far rates have gone. LIBOR is completely, we can call it LIBOR is withdrawn in the banking transactions. It's going to be so far. So far is over 5% now. So that's again, that means all our buyer's credit or ECB, etc., will have higher rate of interest going forward. The cost of finance, I mean. So debt reduction plans, you asked about, definitely, as Ms. Nikhila presented, our CFO, for an overall debt of 500 plus crores, the asset build was about 1,400 crores, close to 1,400 crores. And with solar assets alone, if you look at nearly half of that, and the yield from the solar plants, especially the IPPs, are going to be close to 70 crores plus, maybe around that. So that will take us forward to debt reduction, or keep the debt and increase our asset base. These both can go together. So debt increases, asset also increases, but asset will increase at least 1.5 times the debt. That's how we are running. I think currently the ratio, if you look at it, it's 1.63, if I'm not wrong. Sajid, if you have any more questions, please drop us a mail. We will communicate and we'll reply you further details.
The voting results will be declared around the scrutinizers report within 2 working days from the conclusion of this meeting. It will be placed on the website of the company and on the website of CDSF. The same will be communicated to the stock exchanges in the BSE Limited and NSE Limited. As there is no other business to be transacted, I declare the meeting as closed. We thank you all for the cooperation in ensuring a smooth conduct of the meeting. Now I request Madam Jayashree Nachappan to give a vote of thanks.
Good evening, everyone. Thanks are the highest form of thought. So this gives me immense pleasure to propose the vote of thanks for this 28th AGM. First and foremost, I would like to thank the chairman, the managing director, and the board members for conducting the meeting today successfully, cordially, as always. I also take this opportunity to thank all our shareholders for having trust in us and investing in us. I would like to express my sincere gratitude to all the people who provided us professional support and guidance throughout: our auditors, legal counsel, scrutinizer, RTA, bankers, Government of India, SEBI, and Stock Exchange. My heartfelt thanks to all our distributors, suppliers, customers, and to all our select staff for the immense contribution towards the growth and development of the company. Thanks to CDSL for making this virtual meeting happen. Thank you, one and all.
Thank you.
Thank you.